What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, Nvda, the QQQ, and a couple of other tickers. I'm going to break down what's going on with the economic calendar moving forward, talk about other factors out there, and you should be watching for as time goes on. But just note that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. Deposit $1,000, you're guaranteed 15 in total, not to mention 8.1% APY on uninvested cash. So offer ends very soon in just 7 days. So check it out before they run out. Anyways, now let's talk about the markets. So I just want to mention that the market saw a very, very interesting day. Lots of chop, lots of sideways price action. Didn't really do anything too significant. But near the end of the day, we start to see some metrics that suggested that there was a risk of the market dipping lower. And I still hold that view. I do see a risk of that happening, especially if we lose some key supports. So I will be talking more about what those supports are and why on earth it is very possible for the market to pull back soon and what you should be watching for in regards to that. So I'll talk about that in just a few minutes. Let me first go over some data real quick. As a reminder, guys, tomorrow is going to be Tuesday, September 24th, 2024. Before the market, excuse me, before the market opens, we have some house price data, which is very minor, nothing too crazy. But at 10 o'clock a.m. Eastern Standard Time tomorrow, we have the Consumer Confidence Report, which is not too significant. But then we do have the Richmond Fed numbers coming in, and those are going to be more significant. So the Richmond Fed Manufacturing Index, manufacturing shipments, and then services revenues will be very, very important. We might see some volatility because of this data. So we'll see what this leads to. So you want to be very, very open-minded for that coming out. We also have the 42-day bill auction coming in, the 2-year note auction, so be prepared for some more volatility with this data. But the main time to watch for volatility based off data will be 10 o'clock a.m. Eastern Standard Time. Get ready for the Richmond Fed numbers to come out. It'll give us more insights on how the economy is doing, especially these different sectors from services to manufacturing. Now, another thing worth noting is that the market is still at greed right now, but we're going to be watching to see how well we could hold up here. Will we get closer to neutral, or will we see this continue to hold up? We'll just have to wait and see. And then we also have momentum at extreme greed. We're still doing a good job at holding up and pushing. We're at extreme greed because of the fact that the 125 daily moving average is well below where we are. And that's indicative of the fact that the market is near all-time highs and still in this very, very high area. So that's very important to note. For other factors out there, I just want to mention that the puts and call option ratio is neutral, stuck in the middle, not too high, not too low, as many investors are indecisive. And then finally, we have volatility for the VIX, which is still at neutral. We're at gap support. We'll see if the VIX bounces or not. Two more things. I just want to mention that we have earnings as well coming out. We have AutoZone announcing earnings for tomorrow and a few others, which are quite minor. And then we have Costco announcing earnings on Thursday. Costco is going to be a very, very important one, so get ready for that. It might cause a big move, at least for the retail sector, and I can't wait to see what they end up announcing. The last thing I want to talk about is some very sad news. So right now, guys, there's a lot of tensions going on in the Middle East, and the U.S. is obviously getting involved in this. So it's pretty crazy what's been happening. As you know, this whole history goes back hundreds, if not thousands of years, and each side has their own arguments. I'm just going to say this, guys. The war is continuing. There's a lot of these developments, escalations are rising, and it's not the best of news for us. It's not the best news for anyone, especially innocent people. So it's sad to see things like this going on, but with all these tensions that are going on, right? The U.S. is obviously going to get involved now, and we'll see what kind of effect this has on different commodities out there, which could affect certain sectors. However, right now the charts aren't really showing that this is affecting them as much. We will see if we get some kind of reaction tomorrow. I'm not as sure about that yet. We haven't really seen the charts do much so far. So we will see. But I just want to say that with the US and getting involved in factors, this could affect some commodities that do affect inflation. I don't think this is enough to really cause it to be impacted the same way we were, with the whole situation involving Ukraine. I don't think it's to that same extent, but I do want to note that we'll just have to monitor the situation just to see how it goes. But just know this is not great news whatsoever, right? Maybe it's not affecting the market as much yet, but we'll see if there's some kind of reaction. So, with that being said, guys, let's talk about what's happening with the charts. Why do I think that there could be a pullback coming soon? The first thing I want to mention is that when you look at SPY, we had this high up here and we had this wick that formed, which led to this move to the downside all the way down to about 565 on Friday, followed by a bounce. And then we start to see a lot of chop today. So what's happening is whenever SPY hits the 570s, we are struggling to really break through that resistance. It's a very, very tough resistance. So you can see the higher we go, the tougher it's becoming to really break through that 5.6 or 5.72, 5.73 area. So now we're starting to show some signs of weakness there. So it's tough resistance. That's the first thing you have to remember. The second thing is the PPO is turning a little bit more negative. And the third thing is the fact that with this chop that's going on, we're still barely holding this support right here. So when you go back on the chart, you have this yellow trend line acting as support on SPY. Right? If I zoom out, you guys can see it, but I'm going to zoom in just so that you guys know this is where it's at. So this goes back, many, many weeks, this yellow trend line you see. So this was our support, and we're actually just barely holding this. We came a little below this. We're supposed to bounce off this. We're not doing a good job because resistance is tight. So this makes me think that the market's kind of like in a range right now. We're not really breaking out. We're not really dumping. We're kind of in the middle. But if we were to hypothetically lose 568 on SPY, we're looking for 565 as our next target, the entire range. And if this range in the 565s fail us, we're going all the way down to 563 or below. If we break past 570, we're looking for 572 or higher. As of right now, we're just range bound, but I see a risk of us dipping down to 568 or below. So watch and see if that ends up being the case. I think what's going to happen to SPY, and this is my personal opinion, always remember to watch your levels, guys, just to be safe. But I'm starting to think that this is like a high. We're going to come down, make a lower high right here. And this might start dipping a little bit in the opposite direction. Once I show you ES, it's going to make a lot more sense. And I think that we might be testing 568 as soon as tomorrow. And then if that doesn't hold us, we're looking for a bigger dip to 565 all over again. Now, I'm not saying the market's crashing. I'm not saying that this is a huge crash. It's a bear market. I'm not saying that whatsoever. We're still in a bull market technically. But I just want to say that we could dip a little bit just temporarily to cool off our indicators and do things like that. Grab liquidity again before we try to bounce. So this could just be a small pullback by like 1 to 2%, might just be very, very minor before the market tries to bounce again. That's all I'm trying to say, guys. I'm not saying that this is a crash or anything, just a small pullback looks very, very, very favorable. For ES, I want to call this out as well. So one thing you're seeing is that this is kind of curling like this. We had a high up here, came down, made a lower high, and you could see that this resistance is very tough right here at this 5780 area, not to mention 5800, and struggling. So we have our 20 EMA at 5754 all the way down here. I think what's going to happen is we're just shuffling over here. We're going to continue to shuffle, and we're going to come back down to where this EMA happens to be, right over here, 5750. Now, ES needs to hold the support. But right, we touched the green trend, we bounced, touched it, bounced, touched it, bounced. But I can't guarantee we're going to bounce this time again because I'm seeing that momentum is slowing down. So this might be due for a small pullback because of these imbalances, and this could actually drag us to the lower 5700s. I think that's the most likely case. And if 5700 does not hold us, we still have this big gap to fill way down here. We'll see if we come down a little bit before we try to bounce again. So my view of the market is you're going to watch your levels just to be safe. If we break 5780, look for 5800. And if that breaks, we remain bullish. And if we lose, 5754, we're looking for the lower 5700 area, followed by this gap support at 5680, and then the gap fill below that. Those are going to be your levels. I think what's going to happen is we dip a little bit tomorrow morning. We retest our 20 EMA at the 5750 area, and we might lose this. We might lose this very soon and start dipping to the lower 5700s just for the time being. I find that to be the most likely case. For Nvda, we're also dipping a little bit. So notice that Nvda had this flag that was trying to break out, but it failed to get that breakout. We have this gap to fill down here, and momentum is now kind of like favoring downside a little bit more. So I think we might be retesting our 50 EMA around this 115.5 area all over again. So I think that Nvda is looking a little bit more bearish right here. It's just barely holding up, it's consolidating, but I see a risk of this dipping a little bit lower towards the 115.5 area, if not the 114 area, to fill the gap. Look for a little bit of a dip, and we'll see how it does from there, but that's the most likely case that I'm looking at. For Bitcoin, we have a bearish divergence. Okay, so this was making a higher high, MACD is making a lower high, and also volume is declining, and we're barely holding the support right here on the 4-hour 20 EMA. So that is the level of 63,134. Bitcoin is barely holding that. If we lose that tomorrow, we go down to at least 62,500. If we hold this, we could rebound for 64,000, maybe a little bit under that. My gut's telling me we're going to kind of like consolidate around here for some time, and then we might see a little dip to about 62,500. I'm seeing some weakening momentum indicators, so I think that Bitcoin may dip a little bit lower from here. I think that's the most likely case, just temporarily, right? Not forever, just a temporary move. Tesla is doing amazing. It outperformed the market, looking very strong, but there is one problem. When you zoom out of Tesla, we're all the way up to 250, by the way. It's pretty crazy. But the thing is, we do have a very, very tough resistance between 250 and 255. So I think that Tesla might see a lot of shuffling in this area. It's going to be a tough area. So we might be looking for an attempt to get up into the low 250s, 252.5 to 255, that range. Then we might reject and just consolidate for some time. And then it could pull back to the breakout area around this 244 area. It might retest that. So look for a little bit more upside potential in Tesla, some consolidation to like the 250 to 255 zone. Then it might start dipping back down to 244. That's the most likely move that I am predicting. Looking at this chart, we're holding it very well, so it does have some more upside potential, but just know that if the whole market starts slowing, this will affect Tesla, and it could still get that dip. So please be open-minded to that, guys. I'm just here to give you guys an unbiased analysis. That's what I'm seeing on the chart. For NQ, just like ES, the same setup almost exactly. So we have the green line. Look at the green line right here. That's our support, the 20 EMA. We touched it here, bounced, touched it here, bounced, touched it here, bounced. And now we're about to touch this again at 19,980. I think we're going to dip a little bit to touch that. If we lose this, we dip down to 19,800. That's the previous resistance becoming support. If that fails us, we go all the way down to 19,600 for that gap fill all the way down here if that fails. If we break past 20,200, we're looking for a push. My gut tells me that this is a high. We're coming down. We're making a lower high, and we could dip lower all the way down towards 19,800. I find that to be the most likely case for a little bit of a dip from NQ. For the QQQ, we have a very similar structure. We have that gap to fill below. It's pretty obvious. And then we also have kind of like a double top that's forming. If we don't hold 480, we dip down to fill this gap. In my opinion, down to 475 we go. And if we manage to hold above 485, we turn more bullish. Otherwise, we're just range bound. But this looks to me like this could be a high where we came down, we're making like a lower high. And this might start to slowly downtrend to 480 tomorrow, if not by Wednesday. And then we might consolidate. And if we don't hold 480, look for that gap fill below for a temporary dip before the QQQ tries to bounce again. For Aapl, and here's why I'm talking about the QQQ dipping. Okay, there's a very important reason why. Aapl, of all things, is showing some weakness. We have like a head and shoulders like structure. This could drag the market a little bit lower, or at least be used to do that alongside other tickers. So Aapl has 225.25 as support. If that fails us, we're going down to 223.5. And then we could fill the gap below that in like the 22 area. So we have quite a bit of support on Aapl. We have resistance to watch for at 228. My gut tells me, however, we go down to 225, if not 222. And I think that there is a risk of downside looking at this chart. So please be open-minded to that. For others out there, we have Palantir. Palantir is trying to uptrend right here, doing a good job at holding up. However, like I said in my earlier video, we have this 38 area. If you're watching for, it's going to be a tough resistance. There's no sign of this rejecting it. It could still try to go a little higher towards 38.5 before it tries to reject, but there might be a move coming back down to about 37.3 to retest the breakout. So look for a little bit more upside towards 38.5, then a move back down to about 37.3. That's the most likely case in my personal opinion. Now, Supermicro is doing a good job at holding up, but the issue I see with this is that it might follow Nvidia's trend. So it might actually revisit its 50 EMA, this 450 area, consolidate for some time before it tries to break out higher. So for now, there might be a small dip coming. For Rivian, we did dip a little bit lower before we saw an attempt to rebound, but it's still looking kind of lackluster right here. We need to try to break past 12 to really push for that 12.5 target. If we don't reclaim that, we're looking for a dip back down to retest the lows. My gut is telling me that this rebounded only to reject, and we could be dipping back down towards 11.7. So there's going to be a risk of some downside. For SoFi, we look a little bit more bearish. We're looking at 8.02 as resistance and support at 7.81. We could be tipping all the way down towards 7.81. I think there's a good chance that this will fall lower. For the IWM, we have 220 as our support. If that fails us, we're going to be dipping all the way down towards the 218 area. We also have resistance to watch for at this 222 zone. I'm thinking that the IWM looks a little bit weaker. We're barely holding our 20 EMA, and it looks like we're building a lot of bearish momentum. So it might be dipping down towards 218, guys. Looks a little bit more bearish to me. For the AMD, we're just consolidating up here. I do want to call out the fact that we're at some tough resistance. You guys can see how we had this like resistance zone between 60 and about 157. So I think that we're entering the same zone. We could go a little higher for that 157 target for dipping back down. I think we're going to be retesting 154 all over again. So a little bit of a pop and drop could be coming. ARM is looking a little bit weaker. We're making lower highs and lower lows. So we had this high here, came down, and we're getting kind of tight. I think we retest 140 tomorrow, if not 136 if that fails us. So look for a little bit more downside potential in this chart. For Coinbase, we could be dipping a little bit lower. We're looking for basically 167 as our main support. If that does not hold us, we dip all the way down to 165. If it does hold us, we could try to bounce, but I see some risks of downside for 167. For Amazon, we have 194 as our main resistance. If we break through this, we're looking for 195. If we can't break this, we're looking for a retest of the breakout very close to 191. I think Amazon is showing some strength, but we're at some tough resistance at 194. Could try to go a little bit higher before it starts dipping, but I think this mid 190 area, the 195 zone is going to be a little tough. So it might come back down to 191 before it tries to bounce again, but it might just be a very minor dip. Meta's looking weaker, guys, and this is what's also dictating the QQQ. If you look at tech, guys, tech is showing some weakness. Meta pushed a bit, grabbed liquidity, then started dipping, and this looks like it could dip even more. So we're going to be looking at basically this key support right over here. We're looking at 564 as our resistance. With that not holding, we're at risk of coming all the way down to, I'd say this gap for like 561. And if that fails us, we're looking for a dip below 560. So I see a risk of us dipping a little bit lower, and we'll have to see how things go from here. For Microsoft, I think that this is dipping right now. But one thing worth noting is that we lost a key support. We're losing the 434 area, our 20 EMA, so it's not a good sign. We need to reclaim that to turn back to bullish. If we don't do that, this is at risk of dipping all the way back down to 430, if not 427.8. So Microsoft looks more bearish to me. Google's looking more bearish. We tried to break 165 only to reject, got a strong rejection here. So we're looking for a test of 162.5 tomorrow. If that fails us, we go all the way down to 160. So there's going to be a risk of downside for that as well. DJT, as predicted, we're in the 12s. We could even continue to fall. There's no sign of a bounce yet. Could be looking for 11.5. It still looks more bearish. The VIX has been dipping quite a bit. However, I just want to call out that we're still holding this support here. Will we see a little bounce in the VIX just temporarily before it dips lower to fill the gap, or will it just dump from here? My gut tells me it might bounce a little bit before it comes down to fill the gap later. So the market may dip a little bit, but then it could bounce later on, as the VIX is suggesting. The 10-year is going up just a little bit as there's some uncertainty involving the Fed. That is a little bit bearish for the markets. The dollar is also trying to bounce off 100.5, so that's a good sign. If we manage to break past 101 flats, so that's very close to where our 50 EMA happens to be. So if you look at the dollar, right, this kind of looks like it has an accumulation structure right here. And we also have a nice amount of potential right here. So if we break 101, we're looking for a retest of 101.2, like a little bit higher. So to me, it's looking like the dollar's trying to rebound just a bit, which is bearish for the markets. So right here, we have the 50 EMA right here. I think we might try to break this. So with that being said, the market's in a very, very critical place, guys. Okay, we are starting to show signs that we might dip a little bit. I never said this is a big dip, just a small dip. I want to make it very clear that with this potential, this could be another opportunity to go long if we do see a more significant dip to like the lower supports. SPY is going to be fine. We could still rebound as long as we try to reclaim 563. We're going to be completely fine. So it's not the end of the world, and this is completely healthy. So once again, guys, I anticipate there's going to be a dip most likely coming. I'm seeing that tech, when you look at Microsoft, when you look at Meta, when you look at Google, it looks like we're starting to dip. And I think that it's going to drag the market a little bit lower. Whether or not we continue will be determined by other factors like Jerome Powell's speech on Thursday and other factors like that. But for now, the market looks a little bit heavy and at risk of falling. So always remember to watch your levels. SPY has not lost 568 yet, so we can't officially turn too bearish yet until we see that break. But there is a risk of that happening looking at my technicals and looking at the setups that I'm seeing all around us. All right. So with that being said, thank you all so much for listening. Hope you guys are doing very, very well right now. There's a lot of tensions right now around the world. It's very scary. And I just wanted to say that it makes me, very, very sad just to see people suffering, especially innocent lives who have nothing to do with the conflicts. But simultaneously, it's terrible. We're hoping that, the situation improves. We wish the best for everyone. We're all just like wishing for peace, at least the majority of us. And I also love to just look at this as a moment to just realize that as tough as things are for us, right, living in the US, and I know the majority of my viewers do live in the US, or at least they are in the US. Um, it's tough. Grocery prices are tough. Inflation is at a high, or at least I wouldn't say like at least the reported inflation is not like as high as before, but it still is. The damage still has been done from the past, and that's why prices are just continuing to go up. So nonetheless, yes, inflation is still a big issue. I wouldn't necessarily say it's out of the water. Even if they're reporting inflation is dropping, it's still a big issue, and Americans are still struggling. Okay, and as much as we are struggling, it's very hard. I wish that things could improve, and there's always a way for us to improve. But at the same time, I look at what happens around the world as a reminder that I'm still privileged to be in the US. I don't have to deal with those very, very insane conflicts. And I just wish the best for everyone out there. And I hope you guys kind of like realize that, yes, things are very difficult. I really hope that our lives could be improved when it comes to economic policy and things like that. But simultaneously, I think it's very important to be conscious of the fact that we still have our privileges and our blessings. So never forget about those. Never forget about where we live and how much different we have it relative to other people. And just be grateful. So I just want to thank you all for listening. I appreciate you guys as well. Have a great night, evening, wherever you guys are around the world, and I'll see you guys tomorrow before the market opens. Thanks again, and peace out.